Hello, Prince William Public Library patrons. Welcome to the Protect Your Piggy Bank presentation brought to you by Gray House Publishing and Weiss Ratings. Today we'll be talking about a tool that is available for you because Prince William Public Library subscribes to this content. So you can log in from home or in the library and access all of the content that we'll be talking about today. We'll be talking about the ratings of banks, investments, insurance companies, personal finance tools, and a tool for Medicare supplement insurance. So the Weiss Financial Ratings site is produced by Weiss Ratings and Gray House Publishing. Weiss Ratings has been rating the financial strength and investment performance of thousands of types of institutions and investments for over 40 years. Gray House Publishing is a reference publisher who produces materials for public libraries. So this platform is a joint venture between Weiss Ratings and Gray House Publishing to bring library patrons information on the financial strength ratings of various types of companies and investment ratings. So what we do is provide independent, unbiased, and accurate ratings that you as a library patron can rely on to make the most informed investment decisions, to make better informed decisions about the banks or insurance companies that you might want to do business with, and also to help you price out Medicare supplement insurance. And we'll talk about all of this in this presentation. And again, you have access to all of this content from the Prince William Public Library website. You can log in from home, or you can log in the library and get access to all of this content. So what we'll be talking about today is a way to help you navigate your finances. This website will direct you towards financially secure banks, credit unions, and insurance companies. We'll help you find the best performing investments and show you the stocks or mutual funds that should be avoided. We'll also go over personal finance how-to guides to help you get started in the right direction. Now, the financial ratings platform has two types of ratings. The first are financial strength and safety ratings, and these are for banks, credit unions, and insurance. And what we're doing with these types of ratings is rating the financial stability or the financial strength of these institutions. And what these ratings are doing is trying to answer the question, how will that institution fare in a minor recession, a major recession, or another type of downturn? So if you're doing business with a bank, a credit union, or an insurance company, you want to choose a company that will be there for the long term, who has the financial strength to withstand ups and downs in the market. So our ratings, which range from A being excellent all the way down to E being very weak, these ratings will illuminate the financial strength of that company. And we tend to be like that mean teacher who doesn't like to give out A pluses. So, and that means that our ratings are very conservative. So it takes a lot for a company to get an A rating from us. That also means that A's being excellent and B's being good are our highest ratings. Now, C is a fair rating, but that's not really a bad rating. It's just fair. It's middle of the road, average, as it were. Now, D's and E's are weak and very weak. And according to our rating scale, those might be companies that you might want to reconsider doing business with. And we have another type of rating, and these are our investment ratings. So these are buy, hold, sell investment ratings for stocks, mutual funds, and exchange-traded funds. And these also follow a similar grading scale of A being excellent, B being good, C is fair, D is weak, and E is very weak. But we then pull those into kind of larger buckets where A's and B's are coded as a buy, meaning that we recommend a purchase of these stocks or investments now. A C rating, which is fair, is a hold, meaning that if you have it in your portfolio, hang on to it. Don't necessarily sell it now, but maybe not add more right now. And then the ratings for D and E being weak and very weak, we list those as a sell. So if you have them in your portfolio now would be maybe a good time to sell off those investments and look for something that's a little stronger. Now, let's talk about banks and credit unions. When you log into our platform, you'll be able to search for banks and credit unions that are financially strong or financially secure. So you'll be able to, first off, find out the financial strength of the bank or credit union that you're currently doing business with. You can locate the most financially secure banks or credit unions in your area. And that might help you avoid the hassle of dealing with a failing bank or credit union, and you can also make sure your money is safe. We'll also talk about insurance companies. On the platform, you can locate the financial strength of the insurance companies that you're doing business with now. You can locate the most financially secure insurance companies for your specific needs. And you can make sure your insurance company will be there for you when you need them years down the road just by checking their financial strength now. We'll also talk about stocks. We rate the buy, hold, sell investment ratings for over 11,000 U.S. traded stocks. As of April 3rd, only 428 out of those 11,000 make our grade for a buy rating. You can locate stocks by rating, by industry, total return, and more. And we help you find safer stock investments and show you which ones to avoid. We do the same for mutual funds. So you'll have access to buy, hold, sell investment ratings for 26,000 mutual funds and 2,100 exchange-traded funds. As of April 3rd, only 1,234 mutual funds make our grade for a buy rating. You'll be able to locate funds by rating, by minimum initial investment, fund family, and more. And we'll help you find the best performing mutual funds to maximize your retirement savings. You'll also have access to a number of personal finance how-to guides. These are designed to help you get started on your financial future. They discuss a wide range of personal finance, insurance-related, and investing topics, and they highlight the questions you might not have thought to ask. So they can be super helpful to either learn more about a specific topic or help you get started. We also provide a Medicare supplement insurance tool. So for you, those of you who are turning 65 this year or who might already be on Medicare, this tool will walk you through the Medicare supplement insurance decision-making process. We describe all of the Medigap plans that are available in detail, and we'll help you pick the right plan for your unique healthcare needs. And we'll give you the price that each insurer will charge so that you can get the most coverage at the best price for your budget. And you'll be surprised at how different the pricing is for these Medigap plans. So you could potentially save a bunch of money just by shopping around, and we make it easy. So let's get started. To log into the database, you'll first start at the Prince William Public Library website. You'll click on the digital library, select financial, search for financial ratings. Now remember, you can log in at the library, or you can also log in from home with your library card. So let's take a look at the database. Now, just to review, if we start from the Prince William Public Library website, we're going to click on Digital Library. We're going to click on Financial, and then click on Financial Ratings. And that will bring you to the site. Now, if you are logging in from home, you'll want to click on the Sign In button, and then you'll be able to enter your library card here and click Sign In. So let's get started. Now, all of these charts are our ratings distributions, and we'll talk about each one of those as we move through the site. And we'd like to display these so that you can see, like for stocks, for instance, out of the 11,000 stocks that we rate, there are 414 rated as a buy, 2867 rated as a hold, and just over 6,000 rated as a sell. So these ratings that we're providing can help you steer your investments towards those that are safer and give you more confidence to make your investment decisions. So let's start with stocks. Now you can navigate the site by clicking on the gray bar and all of the tabs of available data that you'll have access to. If you click on stocks, that'll bring you to our stocks page. You'll see a stock of the day, and then again our ratings distribution. Now there are three ways that you can search the database. If you know what you're searching for, you can type in a ticker symbol or a company name, and then you can pull up that data. You can start a quick search over here, which is a guided search, and then you can build a screener and have access to more searching tools. So I'm going to click on Build a Screener, and then I'm going to click on the Add Criteria button, and we can start adding criteria to then start searching for stocks. So I'm going to click on Rating first and add that criteria. And then I want to pull this slider over so we're only looking at A+ to B- stocks, which are rated as a buy. And you can also add a criteria for industry. So say you want to invest in pharma or maybe telecommunication or tech hardware and equipment, so on and so forth. So let's choose pharma. And then you can pick one of these. Now you can add additional criteria by sector, by year founded, if you're looking for companies that have been in business for a longer time. You can look through their price, choose total return. You can change this total return to, let's take a look at 3 years. Now, so here is my search results for A+ to B- pharma stocks and then their 3-year total return. You can sort this descending, and you can see that this MedPace holding with a closing price of 68.08 has a 126% total return compared to Merck at negative 11.34% over the last 3 years. So all of this data just gives you tools to filter all of these stocks and find investments that match your goals in your portfolio. Now, if you click on one of the stocks, you'll have access to all of the data that we collect. So you see their pricing chart over time. Now this video is being recorded in April 2020 in the midst of some terrifically volatile stock market times. So you'll see that just in March, a number of weeks ago, we were at a, quite a high, and the market has gone up, down, up, down, up, down ever since. So, but this data is updated hourly. So you'll have access to the price that's updated many times a day. And then at the end of each day, our ratings are updated. So you'll see changes in those ratings in nearly real time. So the summary page that you'll see first, you'll see our rating up here in the right-hand corner. Now you'll also see the rating divided into reward and risk. So for those of you who are closer to retirement and are looking for investments that are less risky, you'll look for a risk rating that is higher in the in the A's, B's, and C's. Now, if you're a more aggressive investor, you might look for a reward rating that's very high and a risk rating that is lower because you are more inclined to take a risk in an effort to have a heftier reward. Now you can look at all of the data that we collect on each one of the stocks. So you'll see their total return, data on their income statement, their balance sheet. We take the ratings factors and list those in layman's language so they're easy to understand even for someone who is just getting started in investing. Now, if you want to dig further into the data, you can look at key statistics, which compares this particular stock to the industry average for quite a bit of data points. You can look at their rating history over time, a technical chart with even more data, their price history over time. We also make a comparison tool available. So if you wanted to compare this stock to another, you can just search for stocks to add to this comparison tool, and then all the numbers line up side by side so that you can then make those comparisons in an easy fashion. Now, if there are terms that you're not familiar with, we make a glossary available so that you can learn about terms that might not be you might not be used to, and broaden your investing vocabulary and understanding. So let's move on to mutual funds. So I'm going to click on the mutual funds tab, and you can see here the ratings distribution for mutual funds is very similar to stocks right now, with only a very small number, 1234, listed as a buy, 19,000 that are listed as a hold, and just under 6,000 that are listed as a sell. So if we want to search for mutual funds, you can, of course, search in the bar if you know which funds you're looking for. You can start a guided quick search, but let's start a screener. So I'm going to add a criteria, and we want to add rating so that we can pull this slider over to the buy-rated mutual funds, and that adjusts this number down here at the bottom to the number of buy-rated funds, which is 1234. Now let's add a criteria for total assets, and let's add a criteria for minimum initial investment. Now, many, or at least some mutual funds have super high minimum initial investments, which are geared more towards other funds that are investing in funds. The top is a $5 billion minimum initial investment, which I don't know about you out there, but that's way outside my price range. So you can change this number to look for funds that will take a minimum initial investment of, say, $1,000 or less, or $2,500 or less. You can even choose a minimum initial investment of $0 so that you have full flexibility in terms of what you want to invest. And let's also add a criteria for total return, and let's again change that to a longer time period so we can compare these side by side. So I'm going to go ahead and take this 3-year total return, sort it descending, and you can see this BlackRock Technology Opportunity Fund has a 3-year total return of 65% compared to Crossmark Steward, which is down 29% and down 28%. These two may be newer funds, which is why they don't have a total 3-year return listed. So let's go back to our descending and click in this mutual fund. So here you'll see the data that we collect on these individual funds. You have, of course, the overall rating up here in the top right, their net asset value, their total assets, dividend yield, turnover ratio, and expense ratio. And you again have a reward rating and a risk rating so that you can adjust your investments depending on how risky you want your investments to be. You can see where they're investing in their category and subcategory, any fees that they have either when you're buying or when you're selling, their total return, their asset allocation, and a whole bunch of other data. And if you want to dig in a little further, you can look at their top holdings, which are the companies or other investments that they invest in, similar funds in that family, their NAV history, which is their net asset value. You can also use the comparison tool to put a number of mutual funds side by side. And again, what we are trying to do is to help library patrons learn more about the investments that are available to them and to um, be better equipped to make more informed decisions about either saving for retirement or investing in general, or even as simple as how you're allocating the funds in your 401k, that using the investment ratings on the platform, you may be able to talk to your financial advisor or your fund advisor to make a more profitable decision in terms of how you want your asset allocation to be divided. Now, you also have access to exchange traded funds, which are similar to mutual funds with some differences, of course. There are 64 that are rated as a buy, 946 that are rated as a hold, and 1120 who are rated as a sell. And if we click into either by building a screener or into the individual ETFs, you'll see that the data that's available is pretty similar to mutual funds. So their category, subcategory, their total return over time, their asset allocation, and you'll also see their closing price as of yesterday, their net asset value, expense ratio, so on and so forth. So let's move on to banks. And here you'll see the bank of the day, and then let's take a look at the ratings distribution for banks. Now you'll see that unlike stocks and mutual funds, the rating distribution of banks skews very heavily towards the higher ratings of the A plus to the B minus. And I think that just speaks to the stability of the banking market right now. Now, if we want to build a screener to find a bank in your area that is highly rated, let's go ahead and add a rating. And then we can scroll this slider over. Let's move that over to A plus to A minus just to find the best of the best. And we can add a criteria for states with branches so that you can see who operates in Virginia with an A plus to an A minus rating. And you'll see that there are 23 banks that make this cut. And if we click on the first one, you can see the data that we collect on these banks. So these indicators are what's driving this A minus rating right here. So you'll see that they have excellent capitalization, excellent asset quality, excellent profitability, excellent liquidity, and excellent stability. So that's why they have an A minus rating. You can read more about their ratings factors. You can see their asset quality, profitability. Some of these data points are more geared towards, banking professionals. So if you are an average consumer who might be shopping for a bank, or maybe you're a small business owner who might be looking for a line of credit, sometimes it's just the rating that you're after. But if you want to dig in further to the rating, you can really get a sense of why they're rated so high. You can also search for credit unions in a similar fashion. And credit unions, according to this ratings distribution, tend to skew a little higher into the average rating. Now, I just want to remind you that a C plus, C minus, or a C rating is not bad. It's just average. So it's not as good as an A or a B, but it's not a recommended company to not do business with. So we like to advise our users that a C rating is a fair rating. It's not a bad rating according to our scale. So if we build a screener for credit unions, you can add a criteria, choose rating, and then choose state. And here we go with Virginia. And let's move this slider over to look at the A's and B's. And you'll see that there are 36 credit unions with an A to a B rating. So let's move on to insurance companies. Now, similar to credit unions, you'll see that the ratings distribution for insurance companies is more of a typical bell curve where you have a higher distribution in the C range and then a very low distribution at the high end and the very low end. And again, a C rating for an insurance company in particular is not a bad rating. It's a fair rating. And I think that speaks to just the question marks involved in insurance, where you have, risk adjusters who are making decisions financially on what's going to happen in the future. How much should they charge their customers? What might happen to them in terms of a homeowner's policy or a life insurance policy? So this ratings distribution for insurance is pretty typical. Okay, so let's build a screener. So let's start by adding rating, and then let's also add insurance type, and let's also add licensed in, because not every insurer covers all parts of the country. So for insurance type, let's take a look at homeowners insurance. Licensed in, let's choose Virginia. And then let's move this slider over to the A plus to the B minus. So there are 142 insurers who are licensed in Virginia who provide homeowners insurance. Now, if we move this slider over to the red zone, these 6 insurers might be insurers. If you are doing business with them, you might want to maybe shop around for a different policy because their financial strength is just not as strong as those that are in the A plus to the B minus range. And particularly with homeowners insurance or a life insurance policy, you may be working with that insurance company for 20 years. So you want to work with a company that is more financially stable and more likely to be there for you in the long run. Just a number of months ago, when we were dealing with the wildfires out in California, I saw a news article at the time where the insurance companies who were covering those California homeowners, they reported that for every $1 that they were taking in from their customers, they were paying out $1.70 in claims. So it's those financially stable or more stronger companies are able to withstand those either natural disasters or economic downturns or what have you, are able to withstand those economic changes and be in just a better position to continue to service their customers with no problems. So those are the type of things that these ratings can help you avoid doing business with an insurance company that may be on shakier financial ground and won't be able to withstand those downturns that, no one can plan for. Okay, so we have the Medigap tool that's next, but I want to just pop back into our slides just to talk about the Medicare supplement insurance tab and just dive a little deeper into the tool that is available to you as a library card holder with Prince William Public Library. So if we click on this Medigap tab, by entering your name, your email, your age, your gender, and your zip code, you can download a customized Medicare supplement insurance planner and pricing guide that is built just for you. Now, just a reminder, we don't collect any of this information at all. So when we download a sample report together in this video, I'll reiterate that we don't collect your information for any capacity. You can enter a nickname or your initials or what have you. Now, if you want us to email you a copy of the report, you can enter your email address. But if you don't, you can just type in ignore. So I just want to reaffirm that none of this data is collected for any other purposes. So to just begin, Medicare supplement insurance is there because Medicare does not cover all of the costs that are associated with hospital and Medicare or medical insurance once you turn 65. So you can fill the gap with a Medicare Advantage plan or a Medicare supplement insurance plan. And some of the differences between Medigap and Medicare Advantage, Medigap does have higher premiums, but they don't have copays, so that you can have a better sense of what your annual healthcare costs will be, regardless of how many times you need to visit the doctor or if you have a hospital stay. You have the freedom to choose your doctor, and that means that every doctor who accepts Medicare also accepts Medicare supplement insurance. No referrals are necessary, but some routine services are not covered, like vision and hearing. With a Medicare supplement insurance plan, you're covered anywhere in the U.S., and 6 plans also covered coverage abroad. With Medicare Advantage, they generally have lower premiums, but you do have copays. You're restricted to a network, and that means you may need referrals for specialists. Many Medicare Advantage plans include extra benefits like vision, hearing, and fitness plans. But outside of your service area, you're limited to emergency services only. So using this chart, you can get a better sense of whether Medicare alone is right for you, or whether you want to consider a Medicare supplement insurance plan or maybe a Medicare Advantage plan. So there are a couple of secrets that we'll talk about with Medicare supplement insurance. And secret number 1 is that Medigap plans offer identical coverage. And for every lettered plan, every insurer that offers that plan provides the same exact benefits. The plans are regulated by the government, so the coverage within each lettered plan is the same regardless of which insurer you choose. So there are 10 different Medicare supplement insurance plans. Each one of them has a letter from A to N. So that means that every plan A is exactly the same as every other plan A, regardless of which insurance company you choose. Every plan F is the same as all the other plan Fs. Every plan G is the same as all other plan Gs. And that allows you to compare the insurance companies side by side, knowing that you're getting the same exact coverage for anyone who offers that plan in your area because it's regulated by the feds. Secret number 2 is that Medigap plans are standard, but the rates are not. Insurance premiums can vary by thousands of dollars per year for the exact same coverage, and you can potentially save thousands just by shopping around. And we make it super easy with the Medicare supplement insurance tool that you can download from the platform, and it's free to use because you have a Prince William Public Library card. So here's an example. For a 65-year-old female living in Woodbridge, Virginia, if she chooses Plan A, the highest premium is $38.64 per year. compared to the lowest premium of $11.40. Now these are both Plan G, so the coverage is exactly the same. It's just the highest premium one costs more, and there's no benefit. It's more expensive with no bells and whistles. So this woman could save $27.24 every year by switching insurance companies. Here's another example, a male age 68, also in Woodridge, Virginia. Now, if he chose Plan A, the highest premium he'll see is $56.99 compared to the lowest premium, also with Plan A, of $8.96. A savings of $48.03 per year for the exact same coverage because both of these are Plan A, again, regulated by the feds. And here's an example of a couple in Woodbridge, Virginia. Now they chose Plan G. Plan G is one of the most comprehensive plans, and we'll get to that a little later. The highest premium for these two is $77.28 compared to $22.80 for the exact same coverage, a savings of $5,448 per year. That's $54,000 over the course of 10 years. So it really does pay to shop around. Secret number 3 is that safer insurers are not necessarily the most expensive. And higher premiums don't mean you're getting coverage from a stronger, more financially stable insurance provider. Secret number 4 is that you can make the choice. You can get more coverage for less. You can reduce your premium and balance the financial safety of your insurer with your choice of plan. So once we log into the platform, let's hop back. And here we are. So I clicked on the Medigap tab. And again, we don't collect this information in any capacity. It's used to personalize the first page of your report, but then it disappears. So we're not cataloging this information. So again, you can put in your name or maybe just your initial. Now this report can be up to 80 pages in length. So if you would like to get a copy of that report emailed to you, you can enter your information here and then select your age, your gender, and let's use 22192 and get report. Now this will swirl for a moment and then you can click on view report, and I made a sample just now. Okay, so this report will walk you through the decision-making process to determine whether Medicare supplement insurance might be right for you, whether Medicare alone is better for you. So we start with 4 decisions that you might want to consider. Should you seek to get better insurance coverage than Medicare alone? How can you cover the gap between medical bills and what Medicare pays? Which Medigap plan should I choose? And then which insurance company should I buy my Medigap plan from? And to answer those questions, we provide a number of different sections. So we start with what does Medicare cover? And this is a long list of what the benefit is, what Medicare pays, and what you pay, so that you can get a handle on what your out-of-pocket costs might be over the course of a year. And again, Medicare doesn't cover all of the costs associated with healthcare, so you will have out-of-pocket costs if you have Medicare alone. And this goes on for several pages as you work through all of the services that are available. We also talk about the gaps in coverage, and then including deductibles and co-payments. And then we go on to talk about which Medigap plan should you choose. Now there are 10 plans now, which each have a letter A through N. And using this chart, you can see the various items that each plan covers. So you'll see that Plan A has the least amount of coverage with only 4 checkoff boxes. And then you see plans F and plan G who have the most checkoff boxes, and they also include coverage when you travel abroad. Now, there's only one difference between F and G, and that's this checkoff box right here, which is your Part B deductible. Now, Part B deductible is, I believe, $198 that you pay once a year. And in Plan F, the insurance company pays that for you. And with Plan G, you write that check to your provider. So one would assume that Plan F would only be $198 more than Plan G, but unfortunately that's generally not the case. So once you have decided kind of, which Medigap plans you might want to consider, you can move on to the section for each plan. So each plan has a number of paragraphs that talk about what that plan covers, and then you have a very long list of every single insurance company that provides coverage in your area for your age and your gender, and then the actual price that insurance company charges. And we put them in groupings so that you can see the companies with a B- or higher safety rating. And then there are a section for insurers in the C rating and then the D rating. So if we move down this chart, for Plan A, you'll see that the least expensive insurer is $896 per year. Now keep in mind that the coverage that all of these insurance companies are providing is exactly the same because they're all Plan A. So that means you can quickly and easily compare who's going to give you the best rate for that particular coverage. So if we move down this list, you'll see that Reserve National is $1,850, almost $1,000 more per year for the same exact coverage. And then if we keep moving down this list, United Healthcare, now that's an AARP plan. Now this double asterisk means that it's provided by AARP. And AARP only underwrites their Medicare supplement insurance through United Healthcare. So that means if you got one of those nifty postcards in the mail or saw a commercial about Medicare supplement insurance provided by AARP, this United Healthcare Universal is what that plan is. And in this case, the United Healthcare plan is about $1,500 more per year than another insurer. So that's clearly not a good deal. And if we kept moving down this list, First Care Inc., which is a D-rated insurer, has the highest rating or the highest costs for their plans, ranging from $56.99 per year all the way up to $14,000 per year, where you could pay $896 per year and get the same coverage with State Farm Mutual. So it really does pay to shop around. So let's say you want to choose either Plan F or Plan G that has the more comprehensive coverage. So let's take a look at Plan G. So here's Anthem Health Plans of Virginia at $1,140 per year. So this is about $200 more than Plan A, but it has the most comprehensive coverage. Now, if we move down this list, you'll see that United Healthcare, again, is $3,864. So, $2,000 more per year for the same exact coverage. So what this report will do for you is to do all the shopping for you based on your age, your gender, and your zip code so that you can, make the best decision for your own personal situation, whether you're looking for more comprehensive coverage to get a good deal, or maybe you want to compare one insurer to another. Maybe you want to switch either plans or insurers during the next open enrollment period. You can do that, and you can, compare your rates using this tool to go into that decision with just, being more informed. So that's our goal in terms of the Medicare Supplement Insurance Planner. Now, if we pop back to the site, there's a number of financial literacy tools that are available to you. So if you click on the Financial Literacy Tools button, you can view our consumer guides. And these are nifty planners. They range from either 50 to 80 pages to help you navigate some of the decisions that you might be making as you move through your finances, whether you want to explore health savings accounts or long-term care insurance, prescription drug coverage, or elder care choices. You can download these reports to refer to them again and again. They all have worksheets and planners so that you can print those out and just to help you kind of learn more about a topic and get started in the right direction. We have a product called Financial Literacy Basics. Now, these are all available to you because you are a Prince William Public Library patron. So once you log in with your library card, you have access to all of this content. You can learn how to manage debt, how to make and stick to a budget, navigate auto insurance or renter's insurance, learn how to start a 401k, learn how to balance a checking account. You can also view data on buying a home for the first time, saving for your child's education, insurance strategies and estate planning, how to protect yourself from identity theft. We're also adding some more content on how to become an investor, and that will launch before the summer, and that will be available to you as well. There are a number of articles that are on the site to help you kind of take note of what's happening in the in current events that might be affecting either the market or the insurance industry or the banking industry. So we strive to provide information to you to just help you better understand kind of what's going on in the world and how that relates to either investments, banking, or insurance. Now, one last note, and I'm almost done. When you find companies that you want to kind of keep an eye on, we make a watch list available. So for any company that you're interested in, you can click this watch list button. And what that does is it will store it for you in a watch list so that each time you log in to the site, you'll have easy access to the investments or the companies in your watch list. You also get an email alert when you create a watch list anytime any of those investments or companies are upgraded or downgraded. So we will kind of mine the store for you so that you can get an alert immediately once something is upgraded or downgraded, and just be assured that someone is watching your investments for you. So thank you so much, Prince William Public Library patrons, for learning how to protect your piggy bank. I hope it was helpful. And let's just take one more look at how to log in. So you can visit the Prince William Public Library website, click on the digital library, select financial, and search for financial ratings. You can log in from the library or from home with your library card. So thank you so much. Have fun searching in the Weiss Financial Ratings database so you can start protecting your piggy bank today. Thank you.